Good morning. You're watching Market Cafe on ET Now with me, Somat Sarkar, and my co-anchor Ankita Saxena. First up, let's go across to Ankita to know how the first trading session of the US markets performed.
Right, Amit, it was the first trading session of 2023 for US markets. Now, US markets started on a positive note, actually gave up all the earlier gains as concerns such as rising interest rates and high inflation are still knocking down investor sentiments from last year, and they are now continuing into this new year as well. The S&P 500 fell 0.4%, slipping from highs of the day after December's manufacturing index declined at the fastest pace since May 2020. Now, the Dow Jones Industrial Average ended the day down 10 points or 0.03% in trade as shares of Boeing offset the losses. The Nasdaq Composite shed 0.7% in trade. Shares of Tesla and Apple both slipped, weighing heavily on the broader markets and carried forward a main theme from 2022, which is, when the technology sector was really hit hard as the Federal Reserve's raised interest rates. So that theme is continuing, and we are seeing a major sell-off in the tech stocks. Tesla fell a good 12%, hitting its lowest level since August 2020. Following disappointing fourth quarter deliveries, Apple also shed more than 3.5% on reports that it will cut production due to weak demand that's coming in for Apple products. Now, if you look at the European markets closed higher after Germany published lower than expected the inflation figures for December, down to 9.6% on a year-on-year basis. Now, they will be followed by inflation figures from France on Wednesday, which is today, Italy on Thursday, and a flash estimate for the whole euro area on Friday. So do keep an eye out on this data that's likely to come out over a period of this week. The Pan-European Stock 600 closed up 1.2% with almost all sectors in the positive territory. DAX was up 0.8%, CAC up 0.4%, and FTSE was up 1.3% in trade. So that was the roundup of the European and the US markets. How's the crude looking like, Somit?
Well, on the commodity side, firstly, if you look at Brent crude, we have seen a drop of close to 4.4% in trade, and that is the biggest percentage drop that we have seen since September 2022. Now, currently, Brent crude is trading around the $82 per barrel mark, and this drop was on the back of a weak economic outlook coming in and because of weak demand data coming in from China. And because of both these factors, along with stronger US dollar, crude declined, reported its biggest drop since September 2022. On the gas side, if you see, the European gas prices continue to fall because of a milder weather and higher than normal inventory, while in US also we have seen a big drop in the gas prices, nearly 11% drop in trade yesterday, which was the biggest drop in the last 1 month, and currently US gas prices are trading at around $4 per MMBTU mark. When it comes to the Singapore gross refining margin, they also trended lower at close to $8.5 per barrel, and this was because of a big drop that we had seen in middle distillates, which dragged down the overall Singapore gross refining margins. Moving on to gold prices, if you see, gold prices are currently trading around $1,845 per ounce mark, and this is and we have seen a good surge in gold prices. In fact, gold prices surged to the 6-month high in trade, and analysts are also expecting a further rise in the prices. Now, if you see, since November, gold has been on an uptrend on the back of a recession risk that has been looming over the global economy, and also because of the fact that central banks have been continuously buying gold, which has led to higher demand for the commodity. So that's how the commodity market has fared overnight.
Right, so that was the commodity check for you. Now let's quickly look at the macroeconomic events that will be playing out in the course of the day. Now, first up is India's S&P Global Composite Services PMIs that's likely to come out today. We also have in corporate action, we have RHI Magnesita to consider an issuance of equity shares to DBRL. We also have IRB Infra meet to consider the subdivision of the equity shares, and we have Sundaraman Ramamurthy, who will be joining BSE as the Managing Director and CEO starting today. In the IPO listing, we have Radiant Cash Management, which will be listing at the bourses as of today, and we also have Saha Polymers IPO, which will be closing for subscription today. So that was the events that you need to watch out for in today's trading session.
Well, moving on to global news. Firstly, the US manufacturing PMI declined for the third month in a row. Now, the manufacturing PMI declined to 46.2 in December from 47.7 in November. Now, the numbers below 50 signal a contraction in the economy.
South Korea and the United States are discussing launching a tabletop exercise, according to officials from both the sides. They also engaged in joint planning to counter North Korea's increasing nuclear threats. The plan came amid the South Korean president's push to strengthen American extended deterrence. Officials also previously said that North Korea's ramp-up of military drills is on Washington and Seoul's radar.
Well, OPEC's crude output edged higher last month as the Nigeria partially reversed a long-term slump. Now, Nigerian production rose to an 8-month high after the country cracked down on oil theft. Now, the OPEC countries boosted supplies by around 1.5 lakh barrels a day, with the West African nation effectively providing the entire gain in production.
And Tesla shares started 2023 where they left off last year, plunging more than 14%. Growing worries about weakening demand and logistical problems have hampered deliveries for the world's most valuable automaker. Tesla lost more than 65% in market value in a tumultuous 2022.
The FTX co-founder Sam Bankman-Fried pleaded not guilty to the US criminal fraud charges over the collapse of his crypto exchange. Now, the 30-year-old former digital currency billionaire, who is out on bail, entered the plea in federal court in Manhattan. Now, the United States has charged Bankman-Fried with conspiracy via fraud, money laundering, and election finance violations.
China condemned COVID-related travel restrictions imposed by some countries. Now, China said that the practice was unacceptable and unscientific while warning of reciprocity. The United States, Japan, Canada, and India are some of the nations that have imposed restrictions on passengers arriving from China. The restrictions have been put in place over concerns about a raging pandemic likely caused by the highly contagious BF7 variant.
And lastly, Ukraine President Zelensky claims Russia is planning a tactical shift to use more Iranian drones to keep pressure on the capital. Now, Zelensky warned Ukrainians that there could be more restless nights as Russians have been angered by a recent missile strike in Makivka. Russia claims 63 of its soldiers were killed in the strike, while Ukraine claims casualty numbers were in the hundreds. Now, the attack was also the largest setback for the Russian forces, a move that experts suggest could trigger a strong response from Russia. We also caught up with Maruf Raza and Jos Torres on the implications of the prolonged war on the global markets. Let's listen to that.
Russia is looking at an exit from the campaign with whatever gains they have had, which is the entire eastern bloc of Ukraine's territories, which is the kind of boundary and a buffer that Russia wanted between a West-supported Ukraine and a NATO-centric Europe against Russia and the expansion plans of Europe. Why Ukraine into Russia is the fear that Mr. Putin had cited in the very beginning. Now, if that hold continues to be with Russia, I don't think the Ukrainian president would be allowed by his mentors in Washington to go in for a peace arrangement. I see this whole conflict going on for at least several months.
I think a protracted war will lead to continued upside in the dollar index. I think that it's going to keep pressure on the Fed to keep rates at that 5.5% level. As this war continues, it's going to be hard for central banks to take their to start easing, because as soon as they start easing, Vikram, inflation is going to come back. And the lesson from the 70s is if you start taking it easy a little too early, or if you're a little complacent on the inflationary front, it does tend to rear its head and come back and bite us. So I think that the risks for central banks are unfortunately skewed to the downside for economic performance.
Welcome back. You're watching Market Cafe. Now, at Times Network, we are always looking to create investor awareness and make financial matters simple for our viewers. Now, keeping up with our values, we present the second season of Nivesh Ke Funde. On this edition, we take a deep dive into the world of index funds. Let's take a look at this.
The pandemic has seen a number of Indians turn to the financial market to invest their wealth.
Yes, but many have wanted to follow a passive route of investing.
Absolutely. And they have been able to do so by investing in index mutual funds. But Aisha, how does one know if they are investing in an index fund or actively managed fund?
Well, it's quite simple. Index funds mimic a stock market index like the NSE Nifty 50 or the BSE Sensex. So your investments are only in the stocks that are part of the index.
And the investments are made in stocks replicating the same weightage that they have been in the index against which the funds are benchmarked. And since the fund manager just has to replicate the stock composition of the index, the expense ratio is quite low as compared to actively managed funds.
But Nikunj, while a low expense ratio is ideal, investors should also check the tracking error of the index fund before they invest in it.
Yes, a low tracking error shows that index funds returns relative to its benchmark do not vary much, which is a good thing.
Nikunj, another benefit of investing in index funds is that investors get access to diversification.
Right, since the index fund replicates the index, diversification is built into the system.
And if someone is bullish on the long-term prospects of the index, then an index fund is a very simple and easy route to stay invested towards that belief.
Investors can consider adding index funds to their portfolio, but only after consulting with their financial advisor.
That's all in this edition of Nivesh Ke Funde, where today we were talking about index funds. Stay tuned for more such investment insights.
Well, at Times Network, we are always looking to create investor awareness and make financial matters simple for our viewers. Now, keeping up with our values, we present the second season of Nivesh Ke Funde, and on this edition, we focus on the differences between direct equity investment and investing in mutual funds. Take a look at it.
Hello and welcome to another edition of Nivesh Ke Funde. Avan, at times, investors cannot decide whether they should invest directly in equities or invest via mutual funds.
Yes, Nikunj, that can happen. So today, let's talk about how they're different and, more importantly, which kind of investors they're suited for.
Let's start with direct equity. These are what we usually call shares. They allow an investor to own portion of the company, or they can be a part owner of a business.
Right. And mutual funds are vehicles to invest in different asset classes. Mutual funds invest in equities, bonds, government securities, or other fixed income assets based on what kind of a mutual fund it is.
So importantly, the difference is that in equities, the investor is deciding which shares to invest in, while in mutual funds, there is a fund manager, an expert who will take those decisions.
Right, and the manager, along with the research team of the mutual fund company, take informed decisions on where to invest the investor's money.
Before investing in mutual funds, an investor can decide the category of the mutual fund that they can also choose and that they are comfortable with, and the asset, the companies that the mutual fund is investing in.
For investors that are new to investing, mutual funds are an ideal way to start their investing journey, since the fund manager is constantly tracking their investments to help them get optimum returns.
Another benefit of investing in mutual fund is that an investor's money get invested across a large number of securities, even when investing in a single mutual fund.
Yes, and that way the risk undertaken is relatively minimized as opposed to when you invest in the shares of a particular company or companies.
So I want to take this point a little further, Avan. So by investing in mutual funds, investor will get exposure to large number of securities, and the best part is that can be done at a very low investment amount.
Exactly, Nikunj. With as low as just 100 rupees, which is actually difficult to achieve when you're investing directly in equities.
Yes, another point of difference is to invest in equities, an investor needs to have a demat account.
True. And for mutual funds, the investor does not even need to open a demat account.
And so now you know the difference between investing directly in equities and investing via mutual fund. That is all in this edition of Nivesh Ke Funde. Thank you for watching.
So that was a Nivesh Ke Funde for you. Now on to another ET Now report. The National Company Law Tribunal told Reliance Capital's administrator not to present an offer made by the Hinduja Group. Now, the restriction was on tabling the offer past the auction deadline to the committee of the creditors for consideration. Now, the 9,400 crore rupees offer from the Hinduja Group was to be tabled before the verified lenders at the COC meeting on Tuesday.
Network, we are always looking to create investor awareness and make financial matters simple for our viewers. Now, keeping up with our values, we present the second season of Nivesh Ke Funde, and on this edition, we discuss the different kinds of risk involved in mutual fund and investing. Listen in.
Welcome to another edition of Nivesh Ke Funde. Avan, whenever we invest our hard-earned money, we always analyze the risk versus the return.
Absolutely. Every investment avenue has some risk involved. It's just about knowing the level of risk and whether one's actually comfortable with that.
So today, let's talk about the risks involved in mutual fund investing. While they do provide a plethora of assets to invest in, what are some of the key risks that mutual funds carry?
Well, firstly, it's important to note that mutual funds do not guarantee or assure returns. This is because some of the risks that they are subject to are market risks.
Equity mutual funds are investing in stock markets, and the markets are inherently volatile. So inadvertently, mutual funds also face the risk of being impacted by market turmoil.
Another risk is concentration risk. When most of an investor's portfolio is concentrated in a particular sector, if anything impacts that sector, it will adversely impact the investor's portfolio.
That's why it's very important to diversify one's financial portfolio and not have all of one's eggs in one basket.
Another important risk that mutual funds face is the interest rate risk. When interest rates increase, debt mutual funds usually get impacted negatively.
Then there is, of course, the liquidity risk. If, due to some reason, a financial asset is no longer easy to sell as before, it reduces liquidity of that particular asset and realization of fair price becomes less likely.
And further, there's also the credit risk, which is when the mutual fund scheme has invested in a fixed income security and there's a default by the borrower or a downgrade in its ratings.
These are some of the main risks associated with mutual funds. But we must always remember that the great investor Warren Buffett says about managing risks.
Yes, he famously did say that risk comes from not knowing what you're doing. So it's important to know all the risks and then invest.
That's all in this edition of Nivesh Ke Funde. See you next time.
Do watch out for those tips for investing that we get to you on ET Now, Nivesh Ke Funde. Now let's quickly mark the Asian markets. As you can see, Nikkei is in the red. It's down almost 1.5% in trade. However, Shanghai is up 0.1%, and so is Hang Seng. Hang Seng is up in the green, almost 1.5%. Kospi also in the green, up 1%. If you look at the futures, the US futures had started with a negative bias, is now in the green. However, it's largely flattish. If you look at the SGX Nifty on your screens, it's down 0.2%, hinting towards a rather muted start for the Indian markets today.
With that, now let's move across to some stock-specific news, and we have Ashesha joining us in the studio to give us all the stocks that will remain in focus on the back of the news.
Yes, hi, good morning. So IndusInd Bank will be the first one in focus in today's trading session. This is because they released operational update for the quarter gone by yesterday post-market hours, where retail deposit growth accelerated by about 21% on a year-on-year basis and 6% on a sequential basis. Loan growth remained strong at about 19% on a year-on-year basis, and on a quarter-on-quarter basis also we did see an uptick of about 4.6%. Equitas will also be in focus. SBI Mutual Fund has received approval from the Reserve Bank of India to acquire up to 9.99% stake in Equitas. On the back of this, Equitas will be in focus in today's trading session. Moving on to MCX then, on the back of the big block deal that took place yesterday, where Norges Bank Government Pension Fund has bought about 3.4 lakh shares at the price of 1482 rupees per share. So on the back of this stake that has been bought by Norges Bank, this one will also be in focus in today's trading session. Moving on to IRB Infra then, where board meet to consider subdivision or stock split is scheduled to happen today. Aarti Surfactants will also be in focus. Board of Directors have informed the exchanges that they will be considering rights issue in the meeting that is scheduled to happen on the 9th of January. Lastly, Vedanta will be in focus. Remember, they released the production update for the quarter gone by on the exchanges yesterday post-market hours, where alumina production has declined by about 6% on a year-on-year basis due to planned maintenance activities. Refined metal production has also declined by about 2% on a year-on-year basis. Saleable silver production is down 7%, and oil and gas total gross production has also declined 9% on a year-on-year basis. Lastly, Gujarat Gas, they've cut gas prices for Morbi region by about 7 rupees, and they've hiked CNG prices by 3 rupees. On the back of this, Gujarat Gas will continue to be in focus in today's trading session.
Okay, thank you so much for that, Ashesha. Do keep an eye out on all those stocks. Vamakshi is also here with us in the studio to give us all the morning brokerage notes that are coming in. Vamakshi, take us through all the brokerage notes. What are they saying?
Well, absolutely. As we all know, the result season is right around the corner, and we have a lot of brokerages that have actually come on IT stocks, and we have a note actually coming from JP Morgan, and they've given their outlook for the year 2023. Now, what they're saying is that after a year of misfortune in calendar year 2022, they're expecting revenue growth to reset from mid-teens to mid to high single digits. Margin expectations should also reset close to the current levels in their opinion, and they continue to remain cautious on the entire IT sector with 4 neutral ratings and 6 underweight ratings. Now they are neutral on Infosys, Tech Mahindra, Emphasis and Persistent Systems. Apart from that, we also have a few oil and gas stocks on our radar. We have a note coming in from Citi. They prefer gas structurally, but they like OMCs tactically. Now 2022 in their opinion was marked by significant government intervention. They're expecting policy regulatory factors to favor CGDs as well as gas transporters, and it is also important to monitor their revised APM prices as well as any change in allocation in their opinion. Pipeline tariff reviews is also important to monitor for stocks like GSPL as well as GAIL. So on the back of that, they've actually gone ahead and initiated 2 pair trades, the first one being an overweight on GAIL and an underweight on Petronet LNG, and the other pair trade recommendation that they've come out with is an overweight on BPCL and an underweight on IOCL at the same time. Lastly, we will be focusing on a few banking names as well. CLSA has come out with a report, and they're saying that the margin trajectory is seen shifting, but they're also seeing high operating expense flexibility. Credit cycle is expected to remain benign, and they're expecting another good year to come in for Axis, ICICI Bank as well as SBI. Now, Axis is CLSA's top pick in the entire banking sector, and in fact, they've also gone ahead and upgraded their rating on IndusInd Bank from outperform to buy. They've also given a target price of 1,500 per share on IndusInd Bank, but nevertheless, they've also gone ahead and downgraded Bank of Baroda by 1 notch.
Well, thank you, Amakshi, for all those details. Moving on, as Asesha was mentioning that Gujarat Gas has cut industrial gas prices by around 7 rupees. That stock will definitely remain in focus, and let's have a closer look at how it is going to impact and how it will be beneficial for the company. Firstly, they have cut the gas prices for the Morbi region by around 7 rupees per SCM. This is the biggest cut that we have seen quantum-wise since the onset of COVID 2019. Now, along with this, if you see the gas prices now after this cut are at par with propane, which is the biggest competition for Gujarat Gas in the Morbi region, and the prices are in fact now cheaper when compared to LPG cylinder prices. Now, this cut in gas prices also indicate a shift of the company's initial strategy or initial attempt to protect the margins. Now they are focusing more on volume gains rather than protecting their margins. That was the strategy earlier. Now if you see the current Morbi volume stand at close to 1.5 SCMD, which is nearly 42% lower compared to the second quarter volumes and nearly 80% lower compared to the peak volumes that we had seen. And this price cut could immediately reverse around 0.5 SCMD of volumes which were earlier there with the LPG cylinder users. However, it remains to be seen whether the propane tanker users will shift to gas or not, and that would be the key trigger for the share prices and for the company Gujarat Gas, as the major chunk of volume still lies with the propane tanker users. Now higher gas volume could negatively also impact the margins of the company if the volumes continue to rise beyond 3.2 SCMD, given that the gas prices in Asia continue to be at the higher levels. Now to compensate some of these losses, the company on the other hand has actually increased the CNG prices by around 3 rupees per kg and the domestic PNG prices by around 1.5 rupees per SCM. So to compensate the losses that they can incur by cutting the prices on the industrial side, they have hiked the CNG and the domestic PNG gas prices starting today. Now, along with this, we also need to keep an eye out for a host of stocks that would remain in focus, and this is on the back of the fact that AMFI has come out with the categorization list, and they release this list on a half-year basis, and they categorize stocks as large cap, mid cap and small cap based on the last 6-month average market capitalization. Now the list is mainly referred by active equity mutual fund managers, and this list might not necessarily lead to big outflows or inflows in these companies, but if a stock moves up from lower categorization to higher categorization, say from small cap to mid cap or from mid cap to large cap, the visibility of the stock definitely increases. And in the recent list, if you see, what we have noticed is all the fresh listings that have happened in the recent past have been debuted in the small cap category list of the AMFI. Now stocks that have moved from mid cap to large cap are Varun Beverages, ABB India, Page Industries, Tata Elxsi, Bosch, Trent and PI Industries. And the stocks that have moved from a small cap to mid cap are Timken India, Metro Brands, Blue Dart Express, Fine Organic, UCO Bank, ZF Commercial Vehicle, Apollo Tires, KPIT Tech and Piramal Pharma, which is the demerged entity of Piramal Enterprises. So it has debuted in the mid cap list of AMFI. So keep an eye out for these stocks going ahead.
Right, so that was the rejig in the AMFI stock data. Now moving on, Avenue Supermarts has released its Q3 updates, and revenue has jumped both on a year-on-year basis and on a quarter-on-quarter basis. Let's go across to my colleague Winnie to get some more details on this. Over to you, Winnie.
Absolutely. When you look at the numbers coming in for the provisional Q3 update coming in from Avenue Supermart, 11,304 is what the revenue is at, which is a 25% growth on a year-on-year basis and a 9% approximately growth on a quarter-on-quarter basis. It was expected to see a growth, obviously, because it was the festive quarter coming in as well. But some of the analysts are highlighting that the revenue growth they were expecting is a bit slower this time than what was expected according to the books. Now, overall, when you look at it in terms of the store opening trends, they've opened up 4 stores during the December quarter. Now total stock count at the end of 31st December 2022 stands at around 306 total number of stores. Goldman Sachs also reported a note, came out with a note after the Q3 update. What they're highlighting is that the underlying growth seems to have moderated. Like I was mentioning, weakness is seen in store level trends as well. And one more point they're highlighting is that what is seen in terms of the store addition, the pace of store addition, that seems to be coming down over the last few quarters as well. So that is a factor that they are keeping an eye out on. Overall, they're also highlighting that the Q3 update implies a 3-year CAGR, which is also moderated in Q3 to 2% from previously in the last quarter. What we're seeing was around 3% as well. So keep an eye out overall in terms of just the store addition, pace of store additions, as well as how the margins are going to be shaping up as well.
Well, thank you, Winnie, for all those details. Moving on, my colleague Nayantara Rai caught up with the co-founders of Mamaearth, where they are sharing the growth plans of the company and how the growth has been in the past years. And the founders also share that the company is working towards an IPO. Here's do listen into that conversation.
I think from a forward-looking perspective, IPO will be on the cards for our company, and the timing is yet to be decided, and the timing will have external factors. We'll take that into account, but finally, for like a strong growth, profitable company, I think there is always appetite, and from that. I don't think we are concerned as much about what's happening externally.
You don't want to be profitable before you...
We already are.
We are profitable.
You're profitable.
For
You're a
last 2
very
years.
rare unicorn.
Yes.
The profits are not mythical.
We're strong.
No.
We're strong
We
and
pay
profitable.
taxes. No, not funny. We pay taxes on our profits as well. So
Okay, so do we. There is only one
not
minority
as
in India which I
individual,
believe
but
is
as
the salary
company.
class.
So yes, we are profitable now. It's been
How long have you
2
been
years.
profitable?
2 years of
But then
two
tell me,
financial years. Yeah.
why won't you do the IPO? Because it is right now India is the best performing stock market in the world.
Well, like I said, we will, but there is certain level of preparation from a company's maturity perspective, from your processes perspective,
The board
from
that you
putting
have to put together.
Yeah, exactly, right. All of those pieces, and hence we're not in any hurry, right? Because neither do we have capitalization requirements, right? Nor are our investors wanting quick exits, right? So keeping those things in mind, we will time it right in line with the company's ability to continuously deliver on a growth path that it commits to. Right? But yeah, it's on the cards.
Ghazal, there were also overseas plans. I remember the last time I happened to interview Varun, he did mention it.
Yeah.
Are those on track or what's happening there?
So I think we are getting a lot of inbound interest from overseas, which is happening as the interest comes. We are servicing a few markets. But for us, core attention will still be on India because we believe we have a lot more to do here. And
This is a large market.
This is a large market, right?
And it's growing very fast.
Yeah.
The per capita beauty consumption of India is actually lower than Bangladesh. And imagine this is a market that cares for looking
What
good,
is the
right?
delta? What is the difference?
It's about 15% lower.
That's a lot.
Yeah, and you've been to our weddings, you know how conscious we are of looking good.
I think
right?
also because the women's work participation in the workforce in Bangladesh
is higher, and we
it's
see
increasing
that.
in
Yeah.
India, right?
Yeah, of
and
course.
we are seeing that positive change happening.
Yes.
We are further very, very sure of the larger delta coming from there, because as women in workforce increase here in India, the capacity to spend more and take care of themselves also increases, and that's where a large part of growth will also come from for us. Well, that's Ghazal and Varun Alag from Mamaearth. That's likely to make its D Street debut through IPO very soon. Moving on, LIC management has to create shareholder value, says the DPIM secretary Tuhin Kanta Pandey, as he speaks about embedded value of LIC and how the company's exposure to the bourses will pan out. Let's listen in.
LIC was something which was, of course, a big brand, of course, a very big market share, but there is a lot that people did not know about LIC because there was no such detailed granular information which was available, and slowly, that is coming out. Embedded value concept which was just not there. Now, when the embedded value came out LIC in LIC because of the listing, the people have started now viewing it. They are looking at quarter by quarter, how is the embedded value is growing, what is happening to that. And LIC has also the exposures to general markets, both bond markets, equity market, GSECs, and they are also looking at how it panned out, and because that has got an impact on indirectly on the embedded value of that. They are looking at more granularly into the businesses and its growth, some of the promises that LIC made, that they have to push up their businesses on that. They look at the VNB margins, look at the margins of and if you look at other SBI Life and other things, their embedded value, their system, their stock prices have also post-listing have really been discovered over a period of time, not at the time when they were just listed. LIC management also is working on different aspects to it.
Are you advising them on how to create shareholder value?
We have, as I said, it is our duty. It's a duty to see, because it's not enough to really see that we have listed the market, our job is over. And for example, you look at the last quarter results. and they had astounding results in terms of earnings. And they would obviously they will keep it in mind, how those, because the earnings gives the visibility to the shareholders in terms of what's happening on their business. So therefore, it's very important to be communicating, to understanding, to be in touch with the analysts, to talk to the investors. And this is something which we are insisting that the managements must do. And it is the listing companies, and many of these listed companies, we encourage them to talk to the investors, communicate, and I think we are seeing the results. If you really look at the BSE CPSE and you can do Nifty CPSE, they've outperformed this year both BSE and Nifty, General Sensex and Nifty respectively. Of course, they have some catching to do. So I believe the banks are also doing better. There are several other things are there. But of course, it happens. Every CPSE, every PSE will be not be impacted in the same way because they are in different industry. So on the energy side, there has been a little bit uncertainty because of the general situation. But broadly, corporate governance and performance as well as looking after investors has been the buzzword.
Well, moving on to some more news. Now, the NCLAT today will be hearing an appeal filed by Google against the contesting CCI. Now, the Competition Commission of India has imposed around 1,337 crore rupees penalty on the tech company for allegedly violating in the Android mobile ecosystem. Now, the IMDb has forecasted severe to extreme dense fog all across the northwest India for the next 4 days. Now, it is learned that the states like Punjab, Haryana, Chandigarh, Uttar Pradesh and Bihar will be severely affected. Several schools have been shut due to the chilly weather. And lastly, Joe Biden renominates Eric Garcetti as the US envoy to India, with the White House exuding confidence that he would be confirmed by the Senate this time. Now remember, Eric has been shadowed by a controversy over sexual harassment.
And moving on, atmospheric river storm has caused deadly flooding and has led to mudslides in parts of California, with at least one person reported dead. San Francisco was hit by its second wettest day on record, with rainfall reaching 13.87 centimeters in the downtown area. And India edged past Sri Lanka in the first match of the limited over T20 series by 2 runs. Deepak Hooda scored after hitting 41, with Akshar Patel hitting 31 runs, guided Indian team to 162 in 20 overs against Sri Lanka. Debutant Shivam Mavi scalped 4 wickets, while Harshal Patel and Umran Malik bagged 2 wickets each. And the Indian cricket body has invited bids to own and operate teams in the inaugural Women's India Premier League, which is set to happen in March this year.
With that, it's an end to this edition of Market Cafe on ET Now. Stay tuned for more.